Today, we're looking at a piece arguing that Robinhood's recent stock surge, driven by its MIXDX acquisition, is positioning the company to be unstoppable.
Yeah, that's a really bold claim. The piece does a good job laying out the catalysts, this vertical integration and that big Piper Sandler price target. But we've got 3 key opportunities here to really make that unstoppable thesis feel earned and, frankly, a lot more resilient.
Okay, let's jump right in. The heart of it all seems to be that central thesis, this idea that Robinhood is now unstoppable.
Exactly. The primary argument that Robinhood is positioned as unstoppable requires a more robust defense against, the inherent market volatility and the structural risks in this sector.
Right.
Right now, the material focus is really heavily on the positives. You've got the 90% stake in MIXDX, the overweight rating, the macro stuff like Bitcoin hitting 90,000 again. It's all good news.
I get that. I mean, if you're building a bullish case, why would you want to introduce the bear case? Don't you risk diluting the conviction by talking about regulatory risks or operational problems?
That's the classic trap. But it's not about giving bears ammunition. It's about taking it away from them. The weakness here isn't just that risks are omitted. It's that the piece doesn't proactively neutralize the obvious counterarguments. Look, when you use a word like unstoppable, you're throwing down a gauntlet. The reader's first thought is, okay, but what could stop this? And if you don't address the huge headwinds in futures and crypto, the thesis just feels a bit naive, not confident.
So true confidence is showing you've thought about the risks and have an answer for them.
You've got it. It's acknowledging the dangers and then showing how your core advantage, in this case, the MIXDX integration, is the very thing that shields you from them.
Okay, so the suggestion then is to weave this in strategically, not just tack on a risk section. How do you do that without killing the bullish momentum of the piece?
It has to be quick and decisive. You integrate a brief section that acknowledges and then immediately refutes or diminishes the friction points. Think of it as like an inoculation. You introduce a tiny, weakened version of the counterargument and show why Robinhood is already immune.
I like that framing. So can you give me some concrete language? How would you actually build that defense into the text?
Okay, so instead of only talking about the 45% boost in economic efficiency, which is great, you add a sentence about regulatory stickiness. For example, you have to acknowledge that a huge chunk of their revenue still depends on crypto being strong.
Right. The big elephant in the room.
Exactly. But then you pivot instantly. You explain how the MIXDX infrastructure lessens that dependency by creating new fee-based revenue streams that aren't tied to the price of Bitcoin going up. Then you can touch on the regulatory scrutiny around prediction markets.
Which is always a concern.
Always. But you immediately frame owning MIXDX, a CFTC-regulated entity built on LedgerX, as the structural shield. It's their competitive weapon. By doing that, you turn a potential weakness into a core strength, and that unstoppable label suddenly has some real weight behind it.
That's powerful. You're not just presenting a thesis, you're defending it in real time. It makes the entire argument so much more credible.
And that defense brings us right to our next point, which is about the mechanism itself, the MIXDX deal.
The material rightly calls it the strategic fuel.
It is, but while the acquisition is correctly identified as the linchpin, the explanation of why owning the entire infrastructure is such a decisive competitive advantage could be, well, a lot more visceral, more specific.
What do you mean by that?
The weakness is that the piece says Robinhood goes from a middleman app to a full-stack exchange operator. That's true, but the impact of that on innovation gets lost. It's framed mostly around that 45% economic improvement.
And that's a great number, but you're saying it's not the whole story.
Not even close. 45% is a fantastic metric, but an infrastructure play like this is ultimately about 2 things: control and speed.
Okay, so let's unpack that. What does that control actually buy them in the marketplace that competitors who still use third-party vendors just don't have?
It buys them time to market. The suggestion here is to clearly spell out the operational benefits of owning the entire stack: listing, clearing, settling your own contracts. Spell it out in terms of product cadence and direct control over these really lucrative event contracts. This is where the real competitive moat is.
So can you walk me through an example? For a listener who isn't deep in the weeds of exchange operations, how does controlling this process directly translate to a market edge?
Sure. Think of a big event: a presidential election, a Fed policy meeting, an inflation report, anything that creates volatility.
Okay.
Before, if Robinhood wanted to launch a new event contract, say predicting the outcome of the next CPI report, they had to go to a partner, a third-party clearinghouse or exchange. And that means they're on that partner's timeline, their bureaucracy, their risk approvals.
Which could take weeks.
Weeks. And by then, the peak trading interest, the moment of highest volatility, it's probably past. So they're always a step behind, always reactive.
And missing out on the highest volume and the fees that come with it.
Exactly. They were slow. By owning MIX DEX, they become proactive. They control the whole pipe, from the idea to listing it on the exchange. They can launch new, high-margin contracts, which are regulated futures, remember, without asking anyone for permission. Their whole product cycle just shrinks from weeks to maybe days.
That's a massive operational advantage.
It's pure operational leverage. So the concrete example here has to focus on that speed. Detail how owning MIX DX lets them capitalize on market events faster than anyone else.
So you want the contrast to be really stark.
Yes. It needs to hit hard. Don't just say, we no longer rely on a third party for clearing. That's fine. It's functional. Instead, say something like, we can now launch a high-demand contract on tomorrow's Fed meeting within 48 hours, while our competitors are stuck waiting 2 weeks for external sign-offs. That visceral difference proves the moat Piper Sandler was talking about.
I see. So it elevates the whole thing from just a cost-saving move into a genuine offensive weapon to dominate the market.
That's it, exactly. It's a story about speed and innovation, not just saving money. And that kind of self-generated momentum is what you need if you're going to claim a company is unstoppable.
That idea of self-generated momentum, that leads us perfectly into the final point, right? This balance between their internal strategy and what's happening in the broader market.
Yes, the balance is off right now. And that brings us to the third and final critique, which is really about structure.
Okay.
To maximize the impact of the long-term thesis, the material has to structurally separate the permanent strategic advantage from the, let's call it the transient market momentum.
Walk me through the weakness there. Where is it getting blended together?
The weakness is that the section on macro tailwinds, the crypto comeback, market sentiment, is listed as the fourth cylinder of the unstoppable machine.
Right alongside the MAXDX acquisition.
Exactly. By putting it on the same level, it suggests that short-term factors, like a pre-Thanksgiving rally or Bitcoin hitting a specific number, are as fundamental as the massive long-term infrastructure shift from the acquisition.
That's a really sharp point. If your argument for being long-term unstoppable relies too much on a recent Bitcoin surge, the whole thing feels fragile. The market could turn tomorrow and then your thesis is instantly broken.
Precisely. A powerful thesis can't be held hostage by next week's market action. So the suggestion is to reframe those macro tailwinds. They shouldn't be a foundational pillar of the argument.
So what are they?
They're a turbocharger. They exist to explain the magnitude of that single-day 11% explosion in the stock price. The tailwinds explain the headline surge. The acquisition explains the long-term thesis.
Okay, so you're not cutting the mention of the market rally. You're just repositioning it.
Adjusting the emphasis.
Yes, especially in the conclusion. For a concrete example, the final summary needs to state explicitly that the MIX DX acquisition is the transformative, foundational play. It's the reason for the moat. Then you clearly state that the market tailwinds were simply the accelerators. They were the spark that created the excitement and that specific closing price of $128.20 on November 26th.
And doing that ensures the reader walks away focused on the strategic shift, not the market noise.
Exactly. The reader prioritizes the right thing.
That kind of structural discipline is so important. It makes the entire analysis more durable. Like you said, if Bitcoin pulls back tomorrow, the core thesis doesn't crumble because that structural advantage is still there, intact. And it creates conviction that lasts a lot longer than the weekly crypto report.
Wow, this has been an incredibly focused session. We really honed in on three main opportunities. First, fortifying that unstoppable thesis by actively defending it against the obvious counterarguments, like regulatory risk.
Right. Then second, getting really vivid and operational with the competitive edge from the MIAX-DEX deal, really hammering home the advantage of speed and control.
And finally, adjusting the structure to clearly separate the foundational strategy, the acquisition, from the short-term market momentum, which just acted as a turbocharger.
So the actionable steps for the listener are pretty clear. Bolster that central claim by acknowledging and neutralizing the risks. Show, don't just tell, the operational power of owning the entire exchange stack. And make sure MIAX-DEX is the undisputed hero of the long-term story.
If you implement those suggestions, this analysis will